Hi, my name is Afsana Khan, and I have chosen the Reddit and GameStop stock saga as the basis of my systems assignment. I've chosen the soft systems methodology to work through the topic as the problem was unstructured and there were many different players, different complex issues, and linkages to form feedback loops all working together in the system. To help me decide on a suitable and reasonable boundary, I used a rich picture method to know key points within the broad topic whilst researching. Here's a quick look at it here. It was clear that the boundary for this assignment should be the concept of the rich getting richer, in the context of the modern stock trading and legislation. I will outline this in depth in the problem. Later on, I'll dive deeper into the systems model, revealing feedback loops and linkages at play. I have also created an alternative viewpoint using the iceberg model. These models are the most appropriate to reveal system linkages as a guide to root concerns that are leverage points to improve the system itself. The problem. The stock market has been a mirage of excitement filled with bulls, bears, and wolves. Traditionally has been a playground to the wealthy. I believe the term "the rich keeps on getting richer" is now a result of how we've been treating money since the birth of aristocracy and the stock market, powered with the influence over legislation. This game was foolproof until now. The great illusion of financial markets have been busted. The ability to manipulate finances within legal boundaries is now in the public's watchdog's eye. Censorship is also part of the problem, which is rooted in the question, who owns the market? I believe that this is all linked to legislation and practices designed to keep the rich getting richer. This problem and illusion was revealed to us by the effect of the pandemic on US civilians. Armed with COVID relief stimulus checks, they started playing or gambling in the stock market. Influencers started emerging on social media channels like YouTube, TikTok, and Reddit to help guide these new, naive retail investors. Hedge fund managers have been able to manipulate companies by the method of short selling. Short selling is a strategy which are speculated to decline. The stocks are borrowed and then sold at a reduced market price, usually at a profit. This strategy is legally and ethically questionable. It banks on a company going under. Hedge fund managers have been incredible buying power here and have the ability to group together or act individually to move markets, even to business closure. This power is incredibly dangerous. The new, fresh, younger, and digitally connected generation is disrupting the ethically corrupt financial sector by exposing these holes of manipulation. Keith Gill was one of the new age bullish influencers who noticed an 84% shortfall on GameStop stocks. His intensive and infallible research inspired him to invest $53,000 into their stocks in 2019, followed by others through subreddit Wall Street Bets. His main driving point was GameStop was grossly undervalued and that the hedge fund managers were betting against it by short selling. The retail investors do not like this bearish view on the beloved chain store in the United States. The problem with regards to this topic is not that influencers are emerging to take down the traditional wealth gatekeepers. It's exposing the advantages that the hedge fund managers have been benefiting with the help of lawmakers and media lobbyists. It carries the classic theme of the people versus power. This is the reform of protesting where it matters most in the pockets of people, especially the rich. Modeling the rich. This is my model where I show how the rich gets richer. Let's start with the biggest catalyst for the last 2 years, and that's COVID-19. As Winston Churchill said, never let a good crisis go to waste. From this crisis, there's a few things that happen in the United States, noted by Jake Tran, a YouTuber. There's a high increase of unemployment due to business foreclosure. This resulted in the United States government giving COVID economic relief stimulus checks in the Coronavirus Aid Relief and the Economic Security or CARES Act and the American Rescue Plan, as noted by Davis. Davis reminds us that corporate America usually benefits from bailouts, and those resources may not be available in future crises. Let's move back to the people who received the stimulus checks. Populism emerged due to boredom, frustration, and economic disposition. When people are bored, they tend to turn to social media. Tetlock's study confirms that social media can and does have the power to move stock markets. In this case, it was Reddit and Wall Street Bets, which brought about the rise of young, savvy influencers. These are users who are passionate about finances, in particular stocks, and guide or influence mindsets around which stock to invest in and how to get started. Forbes and Bloomberg highlighted that during the pandemic, we have also seen a boom in retail investing platforms such as Robinhood. The ease of use and accessibility to play in the stock markets is now available to all. COVID-19 created a large feedback loop that eventually turned into its own financial bubble. Stimulus checks, together with a blend of unemployment, spare time, and frustration, led to people to turn to the attention of becoming retail investors. They hope to gain their economic and financial freedom and at the same time stick it to Wall Street players that seem to be getting rich at the time of a crisis. Kumar summarizes it perfectly. The stock market is a gamble which attracts high-risk takers who see it as a game. The gambling attraction or addiction is also reinforced by easy accessibility through apps like Robinhood, a commission-free trading platform. Keith Gill was one of those original Redditors on Wall Street Bets to discover the hedge funds were undervaluing or being bearish on GameStop stocks in 2017. He discovered that in January of 2021, there was 140% of GameStop stocks that were shorted. He reported this during the US Congress hearings that they were undervalued, even though the company seemed stable. This is despite the illusion of online shopping being attached to the GameStop business model, which is largely brick and mortar. When Keith Gill's manifesto was published on Wall Street Bets, it convinced retail buyers to buy stocks. This is essentially a meme stock. This was to enforce a short squeeze. When Michael Burry, who was the first person to discover the holes in the financial property sector that led to the 2008 Wall Street crash, Ryan Cohen, the founder of Chewy, online pet shop, also invested in game stocks, and Elon Musk rallied purchasing of these stocks on Twitter, the stock's value soared. The stock game is a positive feedback loop. The more stocks you purchase, the higher the demand and value of the actual stock. Elon Musk was motivated to prevent the GameStop stocks being shorted, as Tesla itself faced the imminent bankruptcy in 2013 and 2017 due to the short selling by Melvin Capital. When a lot of stocks are bought in a short space of time, it creates a short squeeze in the stocks. This is what happened. It mostly affected hedge funds who were shorting the GameStop stocks. Citadel and Melvin Capital, together with two other hedge fund managers, suffered the most during this frenzy. Both came close to bankruptcy and lost billions, yet both are not bankrupt due to the bailouts by friends in the industry, according to Forbes. There are rumors that The Economist, that other hedge fund managers on Wall Street jumped on the short squeeze bandwagon. They too benefited from the meme stock crusade, led by the retail investors on forums like Wall Street Bets. This is where it gets interesting. The short or gamma squeeze inspired a ripple of censorship noted by Tran. The first one came from Discord, who owns Reddit, who censored Wall Street Bets, especially with regards to encouraging the purchasing of GameStop stocks. The second form of censorship came from the most unlikeliest of places, Robinhood. Robinhood's main slogan is democratizing finance for all. Therefore, it was surprising when Robinhood banned the purchasing of GameStop stocks for a 24-hour period. In January 2021, this was reported in the Congress hearing. This created a frenzy among retail marketers and influencers like Elon Musk, who accused Robinhood of siding with the big guys and not the little ones. It also caught the attention of the US Congress, which was investigating this matter. The CEO of Robinhood, Vlad Tenev, had been interrogated by many vloggers and institutions, such as the US Congress, on why the app made this decision. He explained in his interview with Elon Musk that when stocks are bought via the app, funds need to go to the clearinghouse, which usually charges them fees. In the morning of 28 January 2021, Robinhood received over $3 billion as a fee to clear GameStop stock purchases on the day due to the surge or risk. There is a red flag here with regards to the system and how this operates. Yet throughout all my research, I've only come across one article by Roberts on Fortune and one YouTube video, the interview with Portno, that mentions the following. The $3 billion US fee is absolutely and possibly arbitrary. Who Robinhood's clearinghouses are also not clear. On their website, they say that they have their own clearinghouse, Robinhood Securities, and the National Security Clearing Corporation. However, during the frenzy, Citadel admitted in a letter to the Senator Elizabeth Warren that Citadel Securities executes Robinhood's trades. This is a clear link that is not investigated further, even at the US Congress level. It appears on surface that Robinhood's the bad guy, but throughout my investigation, I've discovered that the casual overlooking of Citadel and the clearinghouse linkage is the biggest oversight in the saga. My theory is that Citadel ordered Citadel Securities to issue a high arbitrary fee to prevent bankruptcy or further financial losses to the fund. Robinhood stated that during the hearing that they did not have a choice in the decision on the banning. In the interview with Dave Portnoy, Vlad Tenev says that the app made a decision that day, and if they didn't, the next day they would have been bankrupt. For the first 6 months of 2021, Robinhood received 2 large emergency investing funds to bail them off of future liquidity issues, reported by Forbes, Kulfin, and Gara. Robinhood's decision to pause the buying of GameStop stocks, yet allowing the selling of those stocks in the 24-hour period, gave hedge funds the opportunity to catch their breath and develop a game plan to reduce the amount of their losses. In other words, the rich gets richer again. On the other side, the scandal spurred on the US Congress and the American Securities and Exchange Commission to investigate the matter. In particular, they requested that the product order flow be invested to reduce ease of meme stock purchases by the retail investors. That keeps the control in Wall Street and their politicians. Democracy in finances is futile. This all links to the rich getting richer. The banking and stock market sectors, to quote Tran, will find a way of creatively making money without money. They also have favorable legislation to help them along the way, such as the Commodities Futures Modernization Act. As a wealth gap increases, we see the system inducing in its own demise with a vicious feedback loop. Leverage point. To synthesize the leverage point of the problem statement of the rich getting rich, I applied the iceberg model. I went through the events we see at the surface. The pandemic's effect on the world economy and employment. We saw big corporates like Amazon, well protected during this time of crisis, who were left relatively unaffected or even showed growth. GameStop stock skyrocketed and the app was banned purchasing for a 24-hour period. The trends and patterns can be summarized into the movement of the average citizen and where they turn to support during the unstable economic times. In the system structures layer of the iceberg, we see the rise of the social media power and the deep consciousness around the quality of life you want. Robinhood gave people an access point to trade on the stock market, which is one of the heavyweight system structures in this bigger problem. Legislation comes in here as the financial legislation allowed risky and perhaps unethical trades such as the Commodities Futures Modernization Act in the United States. The mental models at play is where we go to discover our leverage point. The people on the street are frustrated due to their financial positioning and they have a strong desire to regain their economic power. There's also a deep anger against the entire financial system which has failed them. The frustration is on questioning the rich getting rich, even in the economic crisis, such as a pandemic. The second model can be used as a leverage point is around how hedge fund managers operate and they are protected by law, including censorship practices. The rich are happy getting richer through their current practices, even at the expense of people's livelihoods. I believe that the problem presented earlier can be solved with these 2 leverage points working in unison. Conclusion. Many angry Redditors and vloggers believe that Robinhood sold them out. However, I do believe in the intentions to democratize finance. They faced an established bureaucratic system that is protected by legislation and to ensure the rich are getting richer. Democratizing financing for all, closing the wealth gap by slowing down the rich getting rich is still possible. The 2 leverage points presented earlier offers the following recommendations. The first leverage point was that the people on the streets are frustrated due to their financial positioning and their strong desire for power. My recommendation is that people are better empowered and secure in their jobs. This involves better growth of businesses in the country. Quality of life costs can be mitigated by reducing taxation in some sectors such as food and education. The United States government and other governments around the world have introduced very low repo rates that might cause even bigger problems in the future. In other words, there remains a strong possibility for another bubble burst like the 2008 market crash. The second leverage point was around hedge fund managers. There needs to be transparency in the financial sector that will give people faith in the system. Currently, this faith is completely broken, which led to the GameStop frenzy of 2021. The ethical practices of short selling by hedge fund managers is something that can be tightened by reasonable regulation. Currently, legislation and politicians favor these hedge fund managers for their personal gain. An example of this is the US Treasury Secretary Janet Yellen receiving $810,000 in Citadel fees. We are now also seeing that the faith in political system is also broken. It is possible the little guy could muscle out the big powers through extreme numbers that is rallied up through social media. They treat it as a game, and perhaps when people have nothing to lose, this could be the most powerful and the most dangerous. Let me leave you with a quote by John Maynard Keynes, which is now the Wall Street Bets mantra. He said, "We can stay retarded longer than you can stay solvent." Thank you for watching. Reflection. The systems thinking module has been life-changing on how I interpret narratives. I find systems thinking approach more valuable than change management, as it zooms into specific linkages and causal effects whilst being aware of the holistic picture at all times. In this assignment, I thoroughly enjoyed researching to discover all the nodes within the system. This is something I will implement into my business in future. The system thinking approach has taught me empathy. The mental models tool has made me more empathetic during the pandemic. I feel by widening my thinking and understanding of people's mental models around the pandemic made me understand emotions like mental wellness around grief. For example, when a family member passed away recently due to COVID, each family member reacted differently. Understanding mental models helped me give each person the space to grieve how they wanted to. The next example I'd like to share is that most of my staff have children. Diving into their mental models around being a parent during the lockdown helped me become more compassionate towards parents in the workforce. Before this module and the pandemic, I would not have tolerated children interrupting Zoom meetings. The other time where mental models really showed up for me was when the KZN looting as a result of Zuma's arrest occurred. Thanks to the system's methodology, I was able to view the event from all the different angles. I want to understand why the looters did what they did. I was able to stay quite objective during this time and not let the sorrow that everyone else was feeling affect me the same way. I'm now applying the same to anti-vaxxers, Trekkies, and vegans. Another system tool that I like to apply is the connection circles. I was recently in an argument with a friend. I was able to see what the problems or events were and how they all related to each other. It also helped me to identify the feedback loops that was causing the feud. This gave me the opportunity to correct destructive behavior that was creating a negative feedback loop into a positive one, and at the same time being clear on the system. The zooming in to observe the forces operating on a micro level and zooming out to observe the forces operating on a macro level approach is now muscle memory to how I think about all aspects of my life and on the news.